So we wanted to give you our philosophy on how we trade options so that things can make more sense. Most people just want a stock symbol that they can plug into an order form and, get the call and make 1,000% or 100% or 500% or 10,000% or whatever. Now understand that may be how things finish, but that's not how things start. So there's a reason why people get certain outcomes over and over again. Whether it's one time, whether it's 10 times, whether it's, consistently, whether it's consistently inconsistent. We're looking at an approach. We're looking at a philosophy. Okay. My philosophy, as in, different areas that I'm coming from, has always been low risk, high reward. Okay. So whenever I post a stock symbol, 4 letters, 3 letters, 2 letters, then I'm looking to put myself and my followers and subscribers in a position where we could maximize our returns. Doesn't always work, doesn't always get people the results that they want. However, what we're trying to do is give ourselves the best possibility for a big move that can, number one, help us financially and put our accounts where we want them to be, and also erase past mistakes and past mishaps when it comes to trading. Okay, so low risk, high reward. That's how we're looking at things. Now, how do we get into a low risk, high reward trade, and how are we consistently in the biggest movers in the market, in the whole stock market, in the whole world? Okay, the biggest percentage movers. Okay, where did this start? Earnings. You've seen me focus on earnings. You've seen us focused on catalysts, because this gives us the best opportunity to make life-changing calls. Okay, or at least game-changing calls. I'll correct myself. These calls are based on what we've observed, and it's based on what we have seen to be patterns and conditions conducive to big moves, mainly on the downside. Okay, now where do I come from? I come from a bullish perspective the whole time, and I've told one of our members, we are conditioned. Every single piece of literature in the media, CNBC, CNN, MSNBC, Fox News, Fox Business, Bloomberg, it's always, besides commodities and oil and things like that, and energy, we're always focused on the upside. When all the biggest investors, Stanley Druckenmiller, John Paulson, Phil Falcone, Bill Ackman, all these guys have made the most money, or at least the biggest trades individually when they were on the short side. So, we're looking at, like I said, people like Stanley Druckenmiller who's returned 30% consistently for 30 years, and biggest gainers are in downturns in the market. Okay, so when can we see those conditions? Just like a storm, it's like a perfect storm. When can we see those conditions for a storm developing? When we do, we have to prepare for those. So I'm just going to walk you through a couple of things just at a glance. This is a short video. I normally would make this for just my premium members, but this is a summary so everybody can understand what we're doing and how you need to have a strategy and how you at least need to think about trading. So whether you're conservative, whether you try to hit home runs like I do, whether you're somewhere in the middle, whether you're technical, fundamental, you have to have something that you're looking at, something that you're basing your trading off of. So again, I've told somebody, there are a few trades that changed my perspective on trading altogether. You know, it took the limits off of what I thought was possible. So when I seen DocuSign do 116,000%, that's when it completely changed the way that I approached option trading and the limits that I had put on the trading that I had seen previously. All right. Whenever we see DocuSign, what do we see? Number one, it's a tech stock, right? So this is a tech stock that was a real big play when the pandemic was raging. All right. Look at the chart. $316. All right. Look at where it was before they reported, and look at what happened when they reported. Now, number one, what is up with this particular stock? All right, number one, it's a tech stock. You don't believe me? Then we can go to FinViz and check out what's going on with DocuSign. Again, think about it. Tech stocks with a pandemic theme. All right. We're out of the pandemic, so what happens? We continue to trend down, and the market shows you how much they like you by the price of your stock. All right. So DocuSign, what is it? Software, application, technology. This is technology. Okay. It's a tech stock, and guess what? It has a big multiple. Now, again, don't try to copy this pattern, because what I'm telling you is the market is not going to let you make money over and over and over for only a certain amount of time. Look at the price to earnings, 56 times what their earnings are. So the price that the stock is right now is 56 times, or around estimated 56 times what they're actually earning. So which means this stock is technically too high, or fundamentally too high. It's not technically too high because people are buying it, but fundamentally it's not worth this. And guess what? The cash per share and the book value is $1.21 or $4.38. All right. So tell me, how can a stock that's worth so little be trading at so much? All right. So let's go back to our chart. DocuSign also was trending down at the time of the earnings. Okay, so it tops out, makes a double top. So technically it's trending down. It has nowhere else to go, because every time it keeps trying to retest this, we get another push down below this moving average. All right. So what are the three things? I'm giving you I'm giving you my secrets besides my research and my homework and intuition. Pandemic stock, high price to earnings, and a tech stock. All right, those are the three things you need. The three things that have been producing these moves. All right, so look at Netflix. We call Netflix. We bought 375 puts when Netflix closed at $500 the day before. Okay, so we're not just guessing. All right, 500 closed at 505, and it ended up going to $3.50. We bought 375 puts. Okay. Same thing. Tech stock, pandemic, and a high multiple. All right. So why do you think we played PayPal today? PayPal, same thing. It's a tech stock. Not too heavy on pandemic, but guess what? People had to be online processing payments when the pandemic was raised. So it kind of is a pandemic. High multiple, is trading like 40 times earnings, and it's a tech stock. All right. So those three things are in place once again, and it's trending down. It's trending down. So the market from 310 shows you how much they like it at 175. And then we get a record volume day. And guess what? We did 3,000% and bought even more puts when, let me see, so 3,300%. But this was much higher. This was much higher during the day, though. Okay. So again, so the next day, the very next day, we see, or the same day of this move, we see Facebook. Tech stock trending down. Semi high earnings multiple at 22, and it's somewhat of a pandemic stock because people were on social media more and more, just like they were Snap and everything else, when the world was shut down. All right, back a couple of years ago, and it's trending down. So now people show you how much they like the stock. All right, once again, okay. So look at these patterns. Amazon, we're looking at this next. Do not take this. This is not investing advice. Again, I'm not telling you anything of what to buy because, I'm not a financial advisor. I am a stock trader. Okay. So what this is showing us is there's a pattern to these moves. All right. Now, since we hit 31, look at this. We're trending down, and guess what? Another tech stock, huge earnings. Look at how we gapped down Look how we gapped down $4,000. Sorry, $400. Excuse me, $400 we gapped down on this earnings. So it's possible, and it's a tech stock and trending down. So again, we are looking at patterns and trying to predict these moves. Now, when it comes to questions on why we're buying out of the money, look, we're buying out of the money because number one, a lot of people are trading with small accounts. I trade with multiple accounts. Okay, some are bigger than others. This, if I'm buying PayPal and I'm buying $1 contracts or 1 cent contracts, guess what? If we buy all the money and it makes a move that we want to, these are still going to double and triple and quadruple and 10x. So it doesn't really matter that we're buying that far out of the money because we're going to get a return. This is about predicting the move, predicting the direction of the move of the stock. All right. So that's number one. It doesn't matter if you're out of the money if the move that you're predicting is drastic enough to make these appreciate. Number two, I don't want to spend $4 or $5 or $2 or $3 or $600 or $700 a contract when it could still go the other way and I can lose my premium. So I would rather shoot at a pattern that I think is is decent probability. I would rather spend $100 on 5 different stocks, and if it does what I need it to do, which if PayPal gets into the money, then these calls, these 20-cent calls are going to be worth $2 anyway. So either way, I'm making the money that I want to make. All right. Yes, we would rather buy closer to the money because there's a higher probability of getting in the money. But this is not a technical trade. This is a catalyst trade. A catalyst trade, you expect volatility to rule the trade. All right. So I had a person ask me that, why I buy so far out of the money. That's why number 2, SDC, which has not been a good stock for us. SDC is a stock that we normally trade, small caps. I started off trading small caps. So when we're trading small caps, we're already trading very small, very low price contracts. We've had to adapt. I'm a small cap trader. Okay. I don't trade large cap stock. This is out of my element. So you have to realize I'm just learning these. I'm learning large cap since the last 3 months. Okay. I'm not a large cap trader. I've had to make adjustments. I've traded OTCs. I traded NASDAQ. We traded small cap, large cap, mid cap, biotech. We've done all of that, and we try to become an expert. The number one thing we want to be the best. I've always set up to be the best and get in the biggest trades. Okay. Once small cap stocks start running again, okay. Once we start getting these moves, we're spending a little of nothing and getting a whole lot more. So remember that the 3 things I want low risk, high reward, and I want to make sure that I'm using my money in the best way possible.